Well, it is IPO season and we have Fusion Microfinance, a microfinance company which has opened for subscription today. They are looking to raise close to around 1100 odd crores. We have with us the MD and CEO of Fusion Microfinance joining in to discuss this particular IPO, and we have Abhishek Kothari joining in to take us through the interview as well. Abhishek, over to you.
Thank you, Ekta. Welcome, sir, to the show. My first question is that if I take a look at your historical return ratios, now they are on the lower side. It jumped up in Q1 FY23, but that is just ahead of the IPO. And with this fundraise, ROE can get suppressed again. So what is a sustainable, ROE and ROAUM, that is return on asset under management, that you foresee?
Thank you, Abhishek. It's a pleasure to be here. If I take you back, if you look at our 12-year history, we have been growing since beginning. And then if you look at the last 5-6 years, there has been some cycles. If you take out some of these outliers, and if I can share some of the data with you, on an adjusted return on equity has been the last 3 years has been average around 15%. And but though we had to do some provisioning because of the COVID, and ROA also, if you look at the adjusted ROA, will be in the around 3.5. So what we are now saying is that we are behind. All the the provisioning, everything has been behind us. We have grown from 3,600 crore of portfolio in March 2020 to 7,400 crore of portfolio in June. So we believe, and as you rightly mentioned, we have made 75 crore of profit. ROA in the first quarter is around 4.1. 2-3 things also want to highlight here. If you see, RBI has deregulated the pricing, so now there is a headroom to give a more sustainable returns. We have in the last 3 years, on the one side, when we were grappling with the COVID, we were also growing. We opened 400 branches in the last 3 years. And in my overall portfolio, their contribution is only 25%. So we have all the levers to give a sustainable, ROA and ROE as we go forward, because every provisioning, everything has been front loaded, and you will see us giving us consistent and sustainable numbers in future.
Correct. Talking about net interest margin, your own Q1 FY23 net interest margin was around 9.4%, but it is lower than peers like Credit Access had about 11.8%, Spandana about 9.9%, and more than 10% for Satin Credit Care. So in terms of the net interest margin profile in a rising interest rate scenario, when your cost of funds will also increase, would you be able to pass it on and see an improvement trajectory in your net interest margin?
So, Abhishek, if you see, consistently our operating expense has been going down. Our operating expense in the Q1 is hovering around 5.47, 5.48. But in this, I want to highlight 2-3 things. One, we have started a pilot on our MSME vertical in 2019. So if you look at my cost of operations, 0.22 is the contribution from the MSME vertical. Also, 2017 onwards, we set up a separate collection vertical for hard buckets. They contribute around 0.8 to 0.10 paisa in my cost of operations. If you will see that, as I mentioned, if I talk about, you're talking about competition. So I think we have already front-loaded some of these investments which have happened in the last 3 years. So you will see us where as our NIM has improved from March 22 to in the Q1, and we are very hopeful. And as the pricing has been deregulated, that in the our NIM will start getting to a normalized NIM of around 11.3 going forward. Coming to your point on the cost of funds. So again, if you see our history, 2016 till now, overall cost of funds has reduced by close to 550 bips. In the current cycle, Abhishek, where overall the 140 bips has been increased by the regulator, the impact on us is only 25 to 30 bips. Our incremental cost has improved, has increased by 30 bips.
Okay.
Whatever we could do, we have already passed on to our clients, and then now with this equity infusion and the internal accruals, we are very hopeful to get a rating upgrade, and so that it is, our any future impact will get nullified.
Okay. Just talking about rating upgrade, your rating is about A minus across peers. If I compare, only Satin Credit Care is of A minus. Credit Access Grameen is at A plus and Spandana is AA. Okay. Next round on fundraising, I just want to know the current capital level. You are raising about 600 crores. How long will that suffice, and by when will you have a next round of fundraise?
Yeah. So, Abhishek, if you look at our 12-year history, we as a company, Fusion has been really focused to maintain a well-capitalized, keep it very well-capitalized. We have never gone less than 20% capital adequacy. Even today, we are around 21, 22% of capital adequacy. So our guidance would be that, we would in future also would like to maintain this level of capital adequacy. So whenever we will see that we are hitting a level where a capital adequacy is nearing 20%, we will come to the market, and by that time, hopefully, we would have deployed these funds to increase our loan portfolio, and then only we will look at the raising capital in future.
Okay, all right. So we're going to leave it on that note. Thanks, Mr. Sachdev, for joining in and talking to us about your IPO. Well, the company is definitely hopeful in terms of improving its net interest margins, probably above 11% on a normalized basis, and maybe a rating upgrade as well. Need to take a short break. More on the markets and stocks once we're back. Stay tuned.